Hi guys, and welcome back to my channel. If you're new here, I talk about personal finance. If this is not your first time, you're welcome. It's been a while. Today, I'm going to be talking about what has been going on in the Nigerian stock market, what has been going on, what is going on, and how best to position yourself in this market. If you are aware, we have been seeing continuous sell-offs in the market. What do I mean by sell-offs? I mean you've been seeing decline in the share price of most companies on the stock exchange. So a lot of people have been selling off, and the price has been going down. One interesting particular day that no one can forget is the 11th of November. Meanwhile, this setup actually started from the beginning of November. However, on the 11th of November, we saw the stock exchange as the all share index, which is the index that tracks all the stock on the stock exchange. So it declined by 5.04%. And it looks minute if you look at it on the face level, but in comparison, that was the biggest single day loss since 2010. Yeah. So in 15 years, we've not seen this kind of single day loss ever. Right. So, and why did we see, that much of a sell off? It's basically tied to panic selling, and it was as a result of the uncertainties around the capital gains tax that the government is has brought uh, into law, which would take effect from the 1st of January 2026. So, what is this capital gains tax law all about? So, it's basically saying that you if you're an investor that you sold more than 150 million worth of shares in a 12-month period, and your profits exceeds 10 million in a 12-month period, you are subject to capital gains tax of 30% if you're corporate, that's institutional investors, and up to 25% for individuals. So that was the law, and that sent panic into the market, because let's not forget the capital gains tax previously was 10%. So from that 10% down to up to 30%, 25%, that's a lot. And that sent negative sentiment to the market. 150 million sales worth of shares in a 12-month period can seem like a lot for some of us, but for individuals, but for institutional investors or even high net worth individuals, that is like almost like a chicken chicken change. It's minute, right? So it means that inevitably they cannot escape that law, and that sends negative sentiment to the market, right? So fast forward to the next day, before after the close of markets on the 11th, in the evening, we saw a news come out from the Minister of Finance. He mentioned that, um, they might review the capital gains tax law. So, and that news spread all over the market in the evening, and because the result of that was in the next day, we saw like a rebound in the market. So, the stock exchange gained the following day. So basically, you can see why there was a sell-off. So because some and also a clarity was also given by the tax committee on X on the 11th of November as well, stating that the base period was going to be December 2025, right? That is when you are, because the reason why there was uncertainty around the market was because a lot of people don't know if we're not sure if the gains that are talking about, or the capital gains, will be based on your original purchase price. Because if you have someone from 2020 who bought, let's say MTN, or let's say 2021 when MTN did their PO, I think around 160 naira. I'm not sure, can't remember. But let's say that price, let's say for example, is 160 naira at that time, and then in fast forward to 2025, you have MTN trading at 500 levels, and you hold more than that 150 million, let's say hypothetically. So it means that your gains is going to be taxed. But don't forget that a lot has happened between 2021 to 2025. There is the unification of the exchange, which has affected the naira, depreciated a lot. I mean, all the way from I think 300 and something naira official rate back then to 1,400, 450, 500 in 2025. So imagine there's already a loss in terms of naira, especially for foreign investors, because I mean they brought in their dollars at that rate, but now to exit the market, they're exiting at 1,500, which already, so that means in dollar terms they've actually made a loss, but in naira terms they've made huge gain. And then of course this is going to be taxed in naira because there is no provision as to what currency, other foreign currency would this be taxed in. So that is the real reason for the uncertainties, and that was clarified through the X statement, stated that they're going to use 2025 December as base period. So that clarity, and of course the comment from the Minister of Finance um, brought some breather to the market. So the next day we saw like a rebound. So digressing from that, so the next couple of weeks saw like a mixed sentiment. So I mean we're thinking, oh, we'll continue to see green, but then sell-offs still continued gradually, but not as huge as that single day lost on the 11th of November. So what exactly is now happening? Historically, towards the end of the year, November, December, we actually see continuous sell-off because we have a lot of fund managers, institutional investors who had taken position earlier in the year, right, and have and as they've actually booked profits now, because the only way you can book profits is if you sell your investment. So let's say, for example, um, let's say, so this is an example. So let's say stock called X was 15 naira in January when you bought it, and is now trading at 300 naira in November or in December, as the case may be. It's now trading at 300 naira. So, I mean, if for you to say that you made a profit, you have to actually sell it. So you sell it and then book your profits. So a lot of fund managers, of course, would need to close their books. They will need to close their positions and prepare their year-end reporting. So that is the reason why we will now see some of these guys come into the market to sell off their investment. So it's not maybe, oh, there's a panic selling in the market or the CDT now, but then they need to close their books and of course book gains, and that's what we see in a huge number of sellers in the market. And let's not forget our basic economics: supply is more than demand. What happens? Price falls. So that's why we've continued to see this sell-off happen even though we now have clarity as touching how capital gains tax is going to be implemented. So this is a normal year-end behavior. So the stock, your favorite stocks and the market is going to be trading at a cheaper price because of this usual setups. So what exactly should you and I do in this situation? So for example, if you're an existing investor, that is you already have some stocks that you've held on to from the beginning of the year or even previous years, and you know or you are convinced that the stock that you're holding holds value, that is in terms of their fundamentals. Now, what do I mean by fundamentals? I'm speaking to their financial performance. So, is their financial performance sound? And how you find out is when you go through their financial statements. And also the sector that the company is playing in. I mean, is there a huge demand for their products? So it means so you're not just looking at their current performance, you're also trying to project what their future performance will look like. So if the future prospects looks good, I mean, and then their current financial performance is solid, and you are looking to invest for the longer time. So the advice is do not panic sell. So rather what you can do is use dollar cost averaging. What do I mean? So you need to actually buy more gradually, because when you buy more, it means that you're actually buying now at better prices without stress. So it's better you had more gradually, and that also helps you, reduce your weighted average cost of holding that stock. So buy more gradually. So that I'm talking about long-term investors here. And if you're new, that is you've not, so you don't have a position in these stocks. So what exactly should you do? I mean, you are basically getting the same company at a discount. That is the company that you've seen that their fundamentals is solid and all of that. I mean, you've been looking to buy in these stocks before, but now you're hearing, oh, they sell off. And what you are doing now is, oh, you're trying to run away. Actually, the best course of action is to buy now. But you need to start small. So you buy and then you buy gradually, right? So basically, that is it for long-term investors. But of course, if you are a trader that you are holding the stock, that is, you're holding the stocks to just, or you need to get out in the next 2 3 months or in the next 1 month. So what you can do is, I mean, cut your loss. That is, if you don't even want to wait until January, or you can't. That is, you cannot wait until January. You cannot wait until February. You can, cut your loss gradually. Or if you are also, or the best part is if you're already in profit position, you can get out of that position. That is if you really have to. But of course, the best course of action is actually to wait it out, because there will be like there should be a rebound come January, February, especially Q1 of 2026, because Q1 is a time where lots of investors position in fundamentally sound stocks ahead of the release of their 2024 full year results, because we won't see the 2024 full year results this year. We'll see it in Q1 2026. So a lot of investors would like to select the stocks ahead of the release of, so we'll see more of buying interest in the first quarter of 2026. So in first quarter of 2026 you should actually see good returns. And so the question is, when is the best time to get in? It is now when the market is bleeding. So In closing, this is just for educational purposes alone, not a financial advice. So if you require financial advice, reach out to your broker, reach out to your investment advisors. So if you found this useful, and subscribe. Thank you.